Okay, a TFSA is a tax-free savings account for Canadian taxpayers that does not charge taxes on contributions, interest earned, dividends, or capital gains, and can be withdrawn from tax-free at any time. Whew. Okay, now that I made it through that. Hey everybody, welcome back to Drawbridge Finance. My name's Levi Woods, and today we are talking about TFSAs, which I refer to all the time. They are tax-free savings accounts. If you guys don't already know, I love my TFSA. Love it. It is one of my favorite investment vehicles in Canada. Tax-free savings account is not a high-interest savings account. If you go to a bank, they will try to sell you a high-interest savings account and register it as a tax-free savings account. In my opinion, that would be a bad decision. TFSAs should be passive but aggressive investment strategies that contain only Canadian high-yield dividend-paying equities and Canadian ETFs. They should be long-term savings plans only, and they should be managed by a broker at a brokerage firm. TFSAs should not be short-term, they should not be held at banks or credit unions, and they should not be high-interest savings accounts. I have one TFSA, and it is professionally managed by a broker that I've been with for a very long time at an investment brokerage, and it only includes high-yield Canadian dividend-paying equities. Let's talk about the limitations of TFSAs. An individual cannot contribute until January 1st of the year that they turn 18. Now, personally, I think this is ridiculous. When I was 16 years old, I was able to go to work, have a job, pay taxes, but I wasn't able to put that money that I was making into a tax-free savings account that would benefit me in my retirement years. Ludicrous. There's a maximum contribution limit every single year. Well, of course there is. If there was no limitation, somebody like myself would put all of my money, my investment money, into my TFSA, and then I would be just making huge amounts of money. That account would be growing and growing and growing, and in my later years, I would be pulling it all out tax-free. So of course the government has to put a limit on this. They have to put a cap on it. Not really a limitation, but contributions are not tax deductible. What that means is that we pay the taxes prior to putting the money into the investment. So say I make $10,000, I pay taxes, I pay $4,000 in taxes, I have $6,000 remaining. That's how much money I can contribute into the TFSA. That $6,000 contribution has already been taxed, so it goes in tax-free and comes out tax-free when it's worth way more. TFSAs are tracked by the Canadian government. When you register a TFSA, all of the information goes into the system, and that TFSA information goes to the Canadian government. If you over-contribute, this will end up costing you money. That's why I personally only have one TFSA account. That way I can never over-contribute. I know exactly how much I've put into that one account. Now, this is a huge disadvantage to the TFSA, especially for a dividend investor. The foreign dividend withholding tax of 15%. It specifically targets US equities, and when the dividend gets paid from the stock, before it arrives in our Canadian account, there's a withholding tax of 15%. Let's say we had a $100 dividend paid out. We would only actually receive $85 into our Canadian account. Option trading is limited on TFSA. Now, a lot of you don't trade options. I trade options every single day. I have never traded an option in my TFSA. There's limitations on what type of options that I can trade, therefore I just don't do it. American citizens that live in Canada or are eligible to have TFSAs would have to pay American income tax on any earnings earned within the TFSA. That negates the purpose of the TFSA. Therefore, TFSAs are not a good option for American taxpayers. There's no creditor protection. That means if you claim bankruptcy or if somebody comes after you for financial liability, it means the assets held within the TFSA can be seized from you, unlike our RRSPs, which have creditor protection. Let's talk about the benefits of TFSAs. Withdrawals can be made at any time. This is fantastic. It means that when I'm 75, 95, I'm going to be able to withdraw from my TFSA. It's also a bit of a downside because you could take that money out way earlier than you should. Withdrawals are exempt from any tax on the earnings made within the investment. You put a $5,000 investment into the account and you leave it for long enough and it grows to $1 million. When you pull it out, you won't owe the tax on that $1 million. That's fantastic. Super lucky for us Canadians, if we don't actually hit our maximum contribution limit in a single year, we can carry that unused amount forward to a subsequent year. If I was sitting here and I had never contributed to my TFSA, I would be able to put in $57,500. We can even recontribute in the year following a withdrawal. So say last year I was in a pinch and I needed some money. I took $5,000 out of my TFSA. That would increase my limit for 2018. I would be able to put that money tax-free back in to my TFSA. Anyone that's 18 or older can contribute every single year until they die. This is fantastic because unlike an RSP, which you can only contribute to until you're 65, then you have 7 years to kind of deal with it before you have to convert it to a RIF or a LIF. This is one of the craziest benefits of the TFSA. In some provinces in Canada, you can actually name a successor, not a beneficiary, on your TFSA, which means that that tax-free savings account can actually transfer to your successor, say your wife or husband, when you pass away, and it can transfer to that successor tax-free, and they can continue to grow the amounts of money that are in that account. As always, thank you so much for joining me. If you've got a comment or would love to leave a like down below, that would be greatly appreciated. Let's get rich together.